Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report for Wednesday, October 4th, 2023. Before I click through all the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Apple report. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs, weekly analysis in the S&P 500 index, the NASDAQ 100 index, the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves on those stock picks. Just on Tuesday, we put out a stock pick on McDonald's, 5 to 10 minute video. You can see last week was NVIDIA and AMD. You can see all of this, all of our recent stock picks and everything that we produce on a daily basis for free for 5 days. We've got a 5-day free trial up front. You sign up for wickedstocks.com and you get 5 days to check everything out. If you don't like what you see after 5 days, you can bow out at no cost to you whatsoever. So on with the charts. 167.66, this is a weekly chart. That we settled above back in May, set off a meaningful long-term buy signal that, believe it or not, is still in effect. I do think holding above this 166.24 to 167.66 area will keep 228.17 in reach by this point next year. Along the way, I do have, I'd call it kind of a 3 to 5 week target at 190.27 that may well contain buying through November, and we could fall back again from there. It would be a settlement above 190.27 in the coming weeks. That would set up an accelerated rally over the following 3 to 5 months up to 228.17. But until then, we could fill out this wedge between 166.24 and 190.27 for the next several months. And that is just kind of the way it's playing out midterm from what I can see right now. So 166.24 to 167.66, a base of long-term support, able to contain selling not only through October, but even perhaps through all of next year. If you're an options trader and we dip once again into that 167.66 area, you may consider reaching for 185 or 190 out of the money calls that don't expire for at least several months. And that would be one example of an options play. But let's jump to the day itself. I'm going to go and sort of show the intraday pivot points. Still have 173.54. That did a pretty good job yesterday of containing daily buying pressures. 173.63 was the high. 170.43, the low settlement price so far, following that July high, is our intraday support. And as I mentioned yesterday, we could trade inside of this perhaps all day. If we push through, that is to say above 173.54, we should within the day test 175.74 to 176.18. Combination channel top and descending 1/3 speed line that may well contain buying through next week. And once tested, we can fall back into the 166.24 to 167.66 region within a full week or so of trade. But if we do close above 176.18, this 189.86 formation that I mentioned a few moments ago, considered a 3 to 5 week target perhaps, if we close above 176.18, that could be within as little as 2 to 3 weeks. This 189.86 channel top, able to contain buying through November and a significant upside continuation point, buy signal, 190.27 on the weekly chart through the rest of the year and well into next. But I don't want to get too ahead of myself here. Really what we're looking at is a big test near term, 175.74 to 176.18. This is a good area for day traders to set shorts, 3 to 5 day swing traders to set shorts back into the 166.24 to 167.66 region down here. And once again, if we close above 176.18, no good reason to be short the market as we move into later October. You want to be long above 176.18. You may be long now anyway, which was the advised recommendation when we were dipping into this zone of long-term support a week ago. You may be long already. And if we do actually close above 176.18, you're breathing a sigh of relief. You should see a meaningful gains as we move into later October into the upper 180s. So that is kind of that is the dynamic here. I don't know what else to say. I will say once again, and I don't see this happening today, closing below 166.24, But if we did, 162.96 likely within just a few days, and over the next couple of weeks, 158.81, where we could actually bottom out quite possibly into November trade back into the mid 160s again. It would be a settlement though, back below 167.66 on the weekly chart again, 166.24. Back below this area doesn't look pretty. I mentioned how I will show the objective. In fact, I vowed that as soon as I stop recording this video, I'm going to jump on those charts and get them ready to post for you, that in the event this market throws off a significant sell signal by closing the week below 166.24, big picture traders, long-term traders know what to anticipate. That's really all I've got for Wednesday's Apple. Please click like, share, subscribe. Check out wickedstocks.com for that McDonald's stock pick we put on Tuesday and last week's AMD and NVIDIA. And we'll leave it at that. You have a great evening.